Hello, everyone. It's Stephen Whiteside here from the uptrend.com with your morning market outlook for Monday, April 13th, 2026. In the pre-market this morning, stock index futures are down across the board. When futures opened on Sunday night at 6 p.m., they were down a little more than this, so we've come off our overnight lows, but we're still pointing lower at the open. Of course, we don't care how the market opens, we care how it closes. So the market could certainly come back during the day or accelerate to the downside. We'll have to wait and see. Now, so far on Monday morning, we've got crude oil up over 7.5%. It's been pretty steady overnight since it popped yesterday evening. We do have gold down, and that has been pretty steady overnight as well. So the market's reacting to crude oil prices shooting back up over 7.5% on the day. Now, yesterday in our weekly presentation, I talked about the fact that confidence is low, that the market's going to be able to move higher from here. Last week was all about selling into strength. We had short-term buy signals. We hit a bunch of profit targets. We got to lock in some profits. That's what last week was about. This week is not about follow through and buying this strength that we've seen. The strength has been on low volume, and we'll take a look at that in a few minutes. Now, last week was a wide range bar. A handful of stocks really pulled the market higher. The market can do some treading of water this week before we actually see where it wants to go next. We're looking for a breakout of last week's bar. Obviously, we're starting at the top of that bar since the U.S. market closed near the highs of the week. Now, today's an interesting day. It's an emergency parent teachers meeting. It's an emergency Fed meeting, which doesn't happen very often. And you don't like it when the Fed has to have an emergency meeting. You know something bad is happening and they're trying to get ahead of it. So that's not a good thing. We have a whole bunch of earnings and a whole bunch of economic reports coming out this week, inflation, employment. And so it's going to be a very volatile week. Now, here's a weekly chart of the NASDAQ 100. It's coming back up to a wall of resistance. We were not able to break out above 625. We traded above it, but we certainly were not able to break out above it for a whole 3-month period. So, this is a wall of resistance that we've run into. Now, the NASDAQ 100 led the market higher last week. It was up over 4.4%. 4.46% to be exact. And it actually ended the week just above the upper channel line. So yeah, technically that's a weekly buy signal that for the time being, I'm just waving off. I'm not interested in chasing that at this time. Now, here's what's really interesting. If you look at the equal weighted NASDAQ, so the NASDAQ 100, of course, is not equal weighted. The bigger the stock, the more it takes up of the NASDAQ 100, and the more that can swing the actual index. The equal weighted NASDAQ 100, if you gave every stock equal weighting, the market was down last week, nearly 0.25%. So, yeah, this is what everybody's cheering about, but this is the reality that the market was actually lower last week. Now, anything software related, whether your cloud computing, your cybersecurity, or your actual software, was down last week, and there's a whole bunch of stocks in the toilet at the moment, and that still is not changing. And it doesn't have to change. The market, as you can see, can move higher with a handful of stocks, but the underpinnings of the market is pretty shaky at the moment. So there's Adobe, Akamai, Salesforce, Cloudflare, which is a company that we use every single day. There's ServiceNow, there's Palantir. There's Intuit, and this is tax season, so Intuit should be doing something at the moment. There's Snowflake, there's Team, there's Trade Desk, there's Workflow. So none of these stocks are performing at the moment. They're certainly holding the Nasdaq back from moving even higher at the present time. So not everybody enjoyed last week. A lot of short covering on Wednesday where the market gapped higher. So right now the market's reacting to crude oil up over $100 once again. Crude oil had a wild week last week. It made a new high and then it ended the week down 9.5%. And now on Monday morning, we're up 7.5%. You can see that the USO sat right on the edge of the lower channel line on Friday. Of course, it's going to open higher this morning. There is the S&P 500 ETF. You can see it gapped higher on Wednesday. We had a little follow through to the upside on Thursday and Friday. We hit a few price targets last week, excuse me. So hopefully you were locking in some profits and cha-ching, taking money off the table last week. But here we are. If you look to the left, there is a huge wall of resistance just above where we are. It's easier to see on the weekly chart, but I don't think we're going to be able to break through that given what's going on in the rest of the world at this time. Now, looking at the U.S. market, the average volume for the S&P 500 ETF is 88 million, nearly 89 million shares per day. On Friday, we were less than half of that. So, not a lot of people were running into the market last week. When you look at the daily volumes for the SPY from last week, you can see when the market gapped higher, that was the big day of the week. And of course, a lot of short covering on that particular day when it gapped higher, but very little follow through to the upside on Thursday and Friday. You can see less than average volume. So not everybody was as overly excited as you might think based on what happened last week. Now, looking at the Canadian market, again, we popped higher, we gapped higher on Wednesday, and then no fall through to the upside on Thursday and Friday. Still trying to get up to $50, and 3 days in a row we couldn't do it. There's what it looks like on the weekly chart. Now, volume was a bit better in the Canadian market. Of course, the huge focus is on the energy sector. So Friday's volume, yes, it was lower, but when we look at the whole week, Tuesday, Wednesday, Thursday was above average volume. So a lot of people focused on the energy sector. We saw the energy sector break down last week. It is technically on a sell signal. I'm not overly enthusiastic about shorting the energy sector at this time. We certainly didn't get a midterm sell signal, and we did not hit any of the major moving averages. We certainly traded below the 10-day moving average. We did not get to the 50-day. And on the weekly chart, we bounced off the lower channel line, but it's still looking pretty blue. You look down here, there's no red dots down at the bottom here. So not overly concerned about the energy sector based on the charts from last week. Now we've got crude oil up over 7.5% in the pre-market. So we still need to be bullish on the energy sector. Now, money may have come out of the energy sector last week. It certainly went into financials, which had a great week last week and started to break out above the previous high. So that's pretty incredible. And bank stocks certainly broke out above the previous high. And the ETF is heading towards 64.06. We had the National Bank and the TD Bank lead the bank sector higher. The TD Bank, with all of its U.S. exposure, was a big winner last week. What's not working? Well, it's on a buy signal. It is moving up. It is trying to break out above $100, but it is stuck to it at the moment, and that is the Bank of Nova Scotia. Okay, folks, that's all I wanted to cover in this morning's presentation. Without what's happening in the futures in the pre-market, I would have done the exact same presentation. And before the futures came out last night, I was saying confidence was low, and I was not enthusiastic about taking any buy signals from last week's action. Weekly buy signals. And so if you did get a weekly buy signal from last week's close, I wouldn't take it at the moment. I would wait and see, but there's no reason to rush into the market on Monday morning. Have a great day. Next time you'll hear my voice is on Tuesday morning.
Thanks for tuning in until the very end of today's stock market timing educational video. If you found the content valuable, don't forget to express your support by hitting the like button, leave a comment, sharing with your friends, and subscribing to our channel for more insightful updates. Remember, in the world of stocks, timing is crucial, and following the trend can be your greatest ally. If you would like more information on how we can help you better time the stock market, please visit theuptrend.com.